Good morning. It's Monday, February 17th, about 6 a.m. Central Time. Did a race over the weekend. That was the participant medal. It was kind of crazy because they had this torrential downpour that occurred and they had to cut the half marathon into a 10K. So much shorter race than what was originally anticipated here. So it is President's Day, so it's a thin holiday trading type of volume. A lot of the markets are closed, things like meats and also some of the grain markets, they're closed. The COMEX metals, they'll trade to about 130, and then the same thing with the energy markets, but all your softs markets are going to be closed, so definitely quite a bit of thin trading. So I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's take a look at the precious metals markets, a few things here. I did a video on Saturday, which was quite lengthy as far as talking a little bit more about possible re-entry on the silver market. Had a small plan going in place on there, and then also Friday's video was quite comical here with the crazy volatility in a lot of these markets here. So looking at the precious metals overnight, we do have gold and silver. They are edging higher while the copper market continues its sell-off. Copper is down about 1% right now. So you look at the overnight ranges here in the gold market, you have April gold 29.19 was the high. We're trading at 29.09, so about 10 bucks off the high. And then the low of the overnight session was 28.8760. So many of you working with me closely were working 28.85, so it looks like we missed it there. A lot of these markets recently, we've been coming very close on getting some fills near the lows of the sessions, but just missing it here and there by a couple bucks, especially in the overnight sessions. So one of the levels that I really want to watch on the gold market is 28.6860. Again, that's that CPI washout low. That's where the hot data came in. And we really saw those expectations for the Fed to cut rates that came quite off the board. And that's when you get the big sell-off in the gold and silver market. So looking at silver here, bit of a recovery, up 6 cents here, slightly disappointing. I think we should be up a little bit more if it wasn't for the holiday type volume type trading that we're seeing here. And I think a lot of traders are a bit gun shy for adding positions on, especially after that big sell-off on Monday, after all the optimism of coming around from those highs over $34. So we're trading 32.90 last. High was 32.98, low was 32.46. So if you watch the video, I told you that I thought that we would most likely capitulate or have some kind of washout into the Sunday night into the early hours of Monday morning here, because of the fact that so many people most likely added to the positions near those tops here, looking for this breakout for the 36, 38, $40 run. And they got trapped there. So it was bull trap, and then you're going to have people puking out of their positions on the lows. So that critical level that I'm going to be watching on CPI or on silver is going to be that CPI low, which is 31.87.5. So looking at some of the fund flows and things like that, money managers, they did cut their bullish wagers on gold to a 4-week low. That ended on, that's last week's data. So the data is actually a week behind, but you can kind of see the way funds are adding and taking positions off and what things that they were trimming ahead of different key events. Now you look at silver ETFs, you go into Friday. Friday's ETF flows added about 800,000 troy ounces of silver holdings in the last trading session, bringing the net year sales to 13.4 million ounces. So it's a fifth straight day of growth, and it's the longest winning streak since January 16th. So people came in and they bought that breakout on Friday, unfortunately. So you look at the gold silver ratio. So you go back to Thursday, it was 90-1. You go to Friday, it dips down to 86-1. You come in here today, it's about 88.5-1. So about a 50% retracement on that. Now, here's where the critical mass comes in on these markets here, and why they were so chaotic on Friday. It's because you have these copper spreads. Remember, this whole thing started with copper. You had the aluminum tariffs that were announced and the steel tariffs, and then everyone was anticipating copper. So you get this big spread that happens, and it comes back into a bearish contango structure. It's a sign that the chaotic market moves are becoming more normalized from where we shot out at. And if you look at copper, it's got a 2-day sell-off here. So the wide premium and the cash contracts over the 3-month futures contracts on the LME had flipped back into a 50-ton discount in this morning's trading, signaling that the market is a bit more well supplied. So it was this squeeze that went on, and then you got that ripple effect in the silver market and the attempted breakout there. So Friday, they saw a massive arbitrage. I knew they were going to do this. They'll sell the futures contracts, and then they'll buy the discounted contracts, and then you'll see that arbitrage take place. And it was one of the massive arbitrage It's where you bring the copper back into the U.S. and then you drive backwardization for the first time since mid 2023. If you know what I'm talking about, basically contango. There's two terms: contango and backwardization. Excuse me. The price of the commodity in the future costs more than the price of today. That's contango. Farther out you go, the more expensive it is. Well, when you see backwardization, that means the front month costs more than the forward futures contract. And you generally don't see that in markets like silver and copper and things like that because you got to store it. You got to pay interest and storage costs. So that's why the farther out you go, the more expensive it is. But when you get a squeeze, that's when it goes like this. And what they did was they beat that back down into a discount here. So the farther out you go, the more expensive it is on the copper market. And that's what killed the premium on the silver market on Friday. So that's at least in my opinion. So looking at gold, it did advance here after its biggest one-day sell-off. So a lot of people are talking about that. There's some questions about Trump's tariffs and how they'll impact the markets. They want to look at more insights on the reciprocal tariffs, which could kind of take these global trade tensions a little bit higher. I also think about the discussion between the U.S. and Ukraine and Russia, those peace talks. They are starting to formulate here where there's supposed to be a meeting in Saudi Arabia, and I think that some of that geopolitical premium had come into the market. So gold did hold its seventh straight weekly advance, its longest winning streak since 2020, and we're going to want to continue to monitor the economic data coming out because of the fact you had that slump on retail sales on Friday, biggest miss in 2 years. So people are thinking that Fed interest rate cuts. Now all of a sudden, after the hot CPI, they're off the table. You get the weak retail sales, they come back on the table. So now it's pricing in September as that first interest rate cut. In crude oil futures, you did have a little bit of volatility last night, got about $1 range in oil here. It's OPEC is considered delaying its monthly supply increases that are set to start in April. So what I'm going to be watching today, markets close early, so it's going to be thin trading. We do have a couple FOMC speakers. You can see that CNBC isn't on, so they are. That's really the tall tale sign that we're on a holiday. Bloomberg is running some repeat stories and things like that. So going to be a quieter session here. We'll see what happens. 38 degrees, so definitely no fish again. It's just out of control. There's no fish. I'm going to have to go to the grocery store to buy a fish. So, yeah, you got any questions? Futures option trading. Again, it's going to be a pretty thin, quiet day. So, lot of outbound calls to people, checking in with people and things like that. Coming up with some strategies for later on in the week in a couple different markets. But got any questions? Give us a call. And then be sure to go to bluelinefutures.com or go in the link below. You've got info at Blue Line Futures. You want to send us an email with any kind of comments. We've also got the general number there. We'll be able to field calls for you. And then also you can register for a 2-week trial of the Metals Edge here, where we'll break down some of the analysis, key levels here on the precious metals market. So good luck, good trading. Remember, futures option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, good trading.